Hi everyone, good evening. Welcome to this advanced tax webinar by Zolvit. I was waiting for more people to join, but four of you are here, and it's about time to start the webinar. Shall we all start?
Sure, madam.
Yes, thank you for that response. Okay, we'll start. So first of all, amidst your busy schedule, I thank you one and all for taking the time out and joining this webinar. By the end of this webinar, you will have multiple practical insights and also the confidence to deal with your taxes in a very proactive way. So I'm Brinda here. I'm a semi-qualified chartered accountant and I'm happy to see you all here. So I know taxes are very boring and overwhelming to deal with, but it is very crucial to understand our taxes because it will drag us into thousands and thousands of rupees by way of penalties, late fees, and interest. Instead of saying most of our clients, most of the assessees who file taxes don't know about the consequences of not paying advance tax or not deducting TDS, and they end up paying more penalty than the actual tax itself. So I have a value packed session here for you. I will make it as interesting and as simple as possible for you all. And also at the end, I have an action plan which you can decide to whether to take or not. And it will give you, you know, a very good grip on your accounting, finances, and taxation. It will save you a lot of money, time, energy, and also the stress around the taxation, right? So get ready with your pen and paper to note down this session. We'll start off. So you may be wondering what exactly this advanced tax is and why should I care about it? So basically advanced tax is nothing but taking the total tax payable and dividing it into multiple installments and paying it throughout the financial year so that the tax burden is very less at the time of filing income tax return. By being ahead in the advanced tax game, you can save the penalty interest, you can reduce the cash outflow, heavy cash outflow by way of tax towards the single return filing date because you break down and pay it in installments throughout the financial year. And probably you are also saving some money because if you want to be on track, you will automatically have a tax planning source in place which will help you save money. Right. In this session, we are going to see what advanced tax is, for whom it is applicable, the computation of advanced tax, the due dates for paying advanced tax, and the consequences if advanced tax is not properly paid. At the end, we'll discuss the bonus action plan which you can take. Okay. So, what is advanced tax? When we are processing the income tax return, we take into consideration all the income like salary income, business income, rental income, and all other income like capital gains, interest income from FD, and many more incomes, and will arrive at a tax payable. If this tax payable amount is more than or equal to rupees 10,000, then we are supposed to pay advance tax as per the Income Tax Act 1956. So we all know what tax is, but what is advance tax? So to clarify this, for income tax and accounting purpose, we don't follow the calendar year from January to December. Rather, we follow the financial year which starts from April and ends in March. So when we are talking about the financial year 24-25, this is the current financial year, okay? So when we are talking about the financial year 24-25, we are talking about the period between 1/4/2024 and 31/3/2025, which means that we are nearing the end of this financial year 24-25. So whatever income we earn in the financial year 24-25, it will be, or I should say, it should be assessed. That is, it should be calculated and the taxes should be paid in the next financial year. That is financial year 25-26. So this for this financial year 24-25, the year in which the tax is assessed, I'll say the year in which the tax should be assessed and paid is called as the assessment year. And whatever tax we pay in this assessment year relating to the financial year 24-25, it is called as self-assessment tax. And whatever tax we pay in the financial year 24-25 itself, it is called as advance tax. That is to say, the due date for tax lies in the assessment year, but when we pay it in the financial year itself, that is, we are paying the taxes in advance. That is called as advance tax. So, as we saw earlier, if the tax payable is more than or equal to rupees 10,000, we are liable to pay advance tax as per the provisions of Income Tax Act. We'll see the applicability now. So instead of discussing the each and every category of people for whom it is applicable, it is easier to discuss the non-applicability of the advanced tax provisions, because there is only one group of people for whom it is not mandatory. Okay, so we'll see who it is. Any person who's age 60 or above who does not have any business income is exempt from following the provisions of advanced tax. So what does this mean? We can break this down into three sections to understand better. So if you are a person who is aged below 60 but still don't have business income, you are still compliant under the advanced tax provisions. If you are aged above 60 and have business income, you have to pay. You have to comply with the advanced tax provisions. Another thing is, if you're of age 60 or more and you have capital gain of say 50 lakh rupees and you don't have any business income, you don't have to comply with the advanced tax provisions because you don't have any business income and your age category also falls under the exemption category. So one more thing to be noted here is this exemption is only for the individuals, which means if you have a company or an LLP or a partnership firm, the advanced tax provisions are mandatorily applicable. So when it is applicable, when the tax payable amount is more than or equal to rupees 10,000. And while arriving at this 10,000, you can reduce the TDS and TCS credit which you have received in against your PAN. That is, if you log into your income tax portal and check your 26 As for this financial year, whatever TDS TCS credit you have, you can adjust that. That is, you can reduce that from the tax payable, and whatever balance is coming, right, that balance figure, if it is more than or equal to 10,000, you have to pay advance tax. So moving on, how to compute advance tax. So when we process advanced tax computation, is like it's almost like computing the total income tax that we do while income tax filing. So we need to take into consideration all the incomes, all the expenses, and all the deductions which are applicable to the assessee and arrive at that tax amount. And that tax amount is self-calculated, and that is to be paid as advance tax by ourselves. There is no particular form or anything for filing for paying advance tax. So you might be wondering, yeah, I already said that. You might be wondering what form to be filed, how to pay advance tax, and how should I prove the officer that this is my computation? Because while filing income tax return, you will give all the details in the ITR and you will file it. So the assessing officer will know what is the source, what is the expense, and how you have arrived at a particular income. So, but while paying advance tax, the assessing officer will not know anything. So, should you file any form or written kind of a thing for advance tax? If you ask, the answer is no. But only if the assessing officer gives any notice asking for explanation, you have to give documents and submit the estimate. Otherwise, you don't need to file any form to any assessing officer. So at what rate should I pay advance tax? The advance tax should be calculated on the current year's income, the running financial year. So for us now, it is the financial year 24-25. The current year's income at the rate which is in force for that current financial year. If you are individual and if you are aged below 60, you have to calculate advance tax based on that slab rate. If you are a company, it is 30%. And if you are a partnership firm, and so on, and LLP, whatever rate is applicable in that financial year, according to that, you will be paying advance tax. Next is order by assessing officer. So if this slide is slightly overwhelming for you, you can ignore this and just listen to what I'm saying. You can see a word here in the second line saying regular assessment, right? I'll first explain what that regular assessment is. So when when a taxpayer files the income tax return, the assessing officer will go through the same. He might accept the same and he might not accept the same. For example, we'll take the assessee has filed the income tax showing an income of 15 lakh rupees and a tax payable of 10,000 rupees. This is just easy numbers to make you understand, okay? And the assessing officer goes through the documents and whatever source which he has, and he arrives at a total income of 17 lakhs. The assessee has filed 15 lakhs of total income, but the assessing officer arrives at 17 lakhs, and on that additional income, he arrives at a tax of rupees 17,000. So from 10,000, the tax has raised to 12,000 rupees. And for this difference in tax amount, the assessing officer will raise a demand notice. This process entirely is called as a regular assessment. Okay. So this regular assessment can happen for an assessee for any one particular year or for multiple years where the assessing officer is not satisfied with the return filed by the assessee. So, in case where the regular assessment is made in any previous year, then the assessing officer. So, in income tax, once you get caught into something like this, no, when you get into the purview of the assessing officer, you'll be often asked for this data and that data, and we have to be constantly in touch with the department and the assessing officer. So, when he has done regular assessment already, he will have an eye on us, and he has the the power to raise an advance tax liability against us if he's of the opinion that we need to file advance tax, we need to pay advance tax. So when we are calculating our advance tax, we will calculate it for the current year's income. I know my current year's income, but how will the assessing officer know the current year's income? Will he ask me any data? Should I submit any data? The answer is no. He will take a rough basis for calculating the advance tax, and that basis will be either the total income of the latest previous year in which the regular assessment was made, or the total income as filed by the assessee in any subsequent financial year. Whichever is higher, they will take it as a basis for advance tax calculation. So I'll repeat again. So if you take for financial year 1920, 20, 21, 21, 22, 22, 23, and so on, the assessee has made an assessment for the financial year 1920. And the latest return filed is 23-24. The assessee will take the assessed income which he has made in 1920 financial year and compare it with the 23-24 financial year return which the assessee has filed, and he will take whichever is higher, whichever total income is higher, and take that as a basis for calculating advance tax. Okay, hope we are all on the same page. So when will the assessee serve this order? He can serve this order at any point during the financial year, but the last date for serving this order is the last date of February. That is either 28th of February or 29th of February as applicable. From 1st March onwards, he cannot issue this order asking the assessee to pay advance tax. So you might be having a question. What if my advance tax calculation is lower than that of what the assessing officer has asked? So in this situation, you can file an estimate of your current income and the advance tax payable thereon to the assessing officer. So this is the only place we discussed earlier. Remember, we don't need to originally submit any document or form while paying advance tax. But when there is a notice issued by the advanced assessing officer and we are not okay with that basis of calculation, we can show our basis of calculation and whatever the advance tax we arrive at, and we can file it with the assessing officer. So the assessing officer, after issuing the order, he has a right to amend the order. Say, for example, in our example which we saw, he has raised the demand for 2,000, right? he has taken that 17 lakh total income as the basis for advance tax calculation. According to that, 12,000 rupees is the total tax amount, and that 12,000 rupees he is asking us to pay as advance tax. And we file a return after that. That this is for assessment year 1920. Let's assume in that financial year, after that, after serving the notice, we filed the return for 23-24 financial year, and in that we have filed income showing 20 lakhs. So now instead of this 17 lakh total income, even after issuing the order, the assessing officer has the right to amend the order according to the returned income, which is latest, right? So this is everything about computation of advance tax. And as I said earlier, in all advance tax cases payable, the TDS and TCS amount is deductible. So whatever comes after deducting TDS and TCS is only applicable for the advance tax provisions. Okay, so far we have seen what advance tax is, the applicability, and the computation of advance tax. Let's move ahead to see the due dates for paying advance tax. So when should I pay advance tax? This can be divided into two categories. The first category of people are those who file their taxes under presumptive scheme. So this presumptive scheme is a whole another topic, and if you want to know more about it, and if you want to know if it is applicable for you and your business, you can let me know in the chat box. I can prepare a webinar on that as well. So now let's not get deep into it. So the assessees who are filing their taxes on presumptive basis and all other assessees. For the assessees who are filing under presumptive basis, they have only one installment, and the due date for that installment is 15th of March of the financial year. And for all other assessees, they need to pay the advance tax in 4 installments. So what are the 4 installments? The first installment lies on, this is the due date, whatever which we are seeing is the due date of the installment. The first installment ends on 15th June, the second installment on 15th September, the third installment on 15th December, and the last one on 15th March. So you might be wondering, the installment due date ends on 15th March. So what will happen between 16th March and 31st March? Can I still pay any amount as advance tax? I have missed 15th March due date, but now I'm aware that I need to pay advance tax and I want to pay advance tax. Between 16th March and 31st March, can I pay any advance tax? Of course, you can pay advance tax, but you will have to incur the interest penalty because you have missed the installment. Okay, that thing is alone there. Whatever you pay before 31st March of the financial year will be considered as advance tax. So let's move into how much amount I should pay in each installment. By the end of first installment, the total advance tax amount in the credit of our PAN should be 15% of the total income tax payable. And by the end of 15th September, the total advance tax, not only for this installment I'm saying, the total up to 15th September, you should have at least 45% of the total tax as advance tax. And for till 15th September, 75% should be paid, and by 15th March, 100% of the total income tax must be paid as advance tax, right? So if you miss these penalties, if you miss the due dates, or if you miss to pay the respective percentages, you will have to incur penalty interest. So before getting into penalty, I want everyone's attention now. Please, everyone, spare 1 minute with me. So tell this mantra with me, and I'll let you know why. So everyone ready? Together, tell it with me. I will not incur 234 ABC interest. I will not incur 234 ABC interest. I will not incur 234 ABC interest. So why I'm stressing so much on this penalty interest is because throughout the years of my practice, and let's solve it here, we file hundreds and thousands of returns, and what we find as a constant is people paying a lot of money under these 3 sections alone. I'll also include a 4th section called 234F, that is for delayed filing of income tax return, and the penalty for that ranges from 1,000 rupees to 5,000 rupees. So just under these 4 sections, people people are losing thousands and thousands of money, which is really heartbreaking to see. And this happens purely because they are not aware of what they should have done in the first place to avoid this interest. Right? Now we'll see what this 234 ABC interest are. Okay. The penalty interest under section 234A arises when you don't file your income tax return within the due date. Earlier I said it is 234F, that is the late fees payable, and 234A is the interest payable. For the same mistake, you pay a late fees and you also pay interest. See, the same mistake here, you will get charged interest and also late fees. So when you don't file your income tax return within the due date, what will happen is you have to pay 1% of amount as penalty for the from the due date. That is, if suppose your due date is 31st of July, you don't file. We'll see the example. Okay, say Mr. X has a tax liability in financial year 24-25 of rupees 25,000, and he has a TDS of 10,000, and he has paid some amount of advance tax, that is 5,000. His due date for filing income tax return is 31st of July, but he files it only on 8th of December. Now what will happen? He incurs 234A interest. And what will be the base for this 234A interest? It will be the tax liability 25,000 minus the TDS minus the advance tax which he has already paid. So the net amount will be rupees 10,000. Now, can anyone tell me, should we pay advance tax? Is Mr. X liable to pay advance tax? Anyone? Hello? Right, okay, I'll continue. So we earlier saw that if the tax liability is equal to or more than rupees 10,000, the assessee is liable to pay advance tax. So here he is liable, his total net tax liability is exactly rupees 10,000, but still he has to pay advance tax. So interest under section 234A is the base 10,000 into 1% per month or part thereof. So he should have filed in July, but he missed it. So August, September, October, November, and December. Even though he has paid in on 8th December, the entire month he has to pay interest. So 5 months we are taking 10,000 into 1% into 5 months. 500 rupees he will be paying as 234A interest. And for delayed filing, if his turnover was more than rupees 5 lakhs, he will be paying 5,000 rupees under section 234F. And if it is less than 5 lakhs, he will be paying 1,000 rupees under section 234F. So here itself, under this one or two sections itself, he is incurring thousands of rupees of tax and late fees and interest. Next, in the same example, let's say he does not pay any advance tax. He only has a TDS credit of rupees 10,000. So what will happen? The base for the interest, the net amount will become 15,000 as he has not paid any advance tax. Now the interest will be 15,000 into 1% into 5 months, rupees 750. Just by paying advance tax, a small amount of advance tax, he has saved rupees 250 of interest in the first case, and he has incurred rupees 250 interest in the second case. Also, he'll be incurring other two sections interest also. Out of that interest, he has saved rupees 250 in the first case. Understood? Next, moving on to section 234B interest. This is for non-payment or short payment of advance tax. What does non-payment or short payment mean? Let me explain. So, when you are filing the income tax return, you will arrive at an income tax amount after deducting TDS. In that amount, at least 90% of the amount should be paid as advance tax. That is before 31st March 2025. If that 90% is not paid, if this 90% criteria is not met, then the assessee has to pay 1% interest again for per month or part thereof from 1st April. That is till 31st March, you have time to pay advance tax. If you miss that, from 1st April onwards, till the date of filing the return, you have to pay 1% on the difference amount. So what is this difference amount? Whatever the advance tax minus 90%? No. Here is where people make mistake. The difference amount is whatever you have paid as advance tax minus whatever is your tax liability. That is whatever the tax outstanding amount on that 1% for every month from the date of from 1st April till the date of filing, you will be paying interest under section 234B. We'll again understand clearly with another example. Mr. X again has a total tax liability of 25,000 and he has not paid advance tax, and he files the return on 4th July within the due date this time. Okay, so 234B interest will be 25,000 into 1% for how many months? 4 months from April, May, June, and July into 4 months. 1,000 rupees he is incurring as interest under section 234B just because he has not met the 90% criteria. Next example, we'll see that he has paid some amount of advance tax. Okay, he has this time paid 18,000 rupees as advance tax. So what is 90% of 25,000? It is rupees 22,500, and the difference outstanding amount is rupees 7,000. So on this 7,000, 1% he has to pay as interest under section 234B, that is rupees 280. So again, if you see, both the cases are similar, but by making advance tax payment, he has reduced his interest liability from 1,000 rupees to rupees 280. So this difference, this reduction in interest happens only if you make at least some amount of advance tax payment in the respective financial year. Moving on to the last section of the penalty interest, it is for deferment in payment of advance tax. What is deferment in payment of advance tax? So we earlier saw that there are 4 installments in which you have to pay a set percentage of amount as advance tax. If you don't pay the set percentage, for example, by the end of June, you have paid advance tax, but you have paid only 10% of the total tax as advance tax. And by the end of September, you've paid only 30%, so on and so forth. This reduced amount which you have paid within the installments is called as deferment in payment of advance tax. For this also, you will be paying 1% interest, but the 1% will be on the difference amount. That is, first we have paid only 10%, right? What is the difference between the 10% and 15%? On that 5% amount into 1% into 3 months for the first installment, the difference amount into 1% into 3 months for the second installment, and so on and so forth. For the last installment alone, you will be paying interest only for 1 month, right? Now, let's see an example. Let's see an example. The tax liability is 25,000. Okay. The due date for making the payment is June 15, September 15, December 15, and March 15, as we've already seen. Out of the 25,000, if we apply this percentage 15, 45, 75, and 100, we will get 3,750 for first installment, 11,250 for second, 18,750 for third, and full 100% for the fourth installment. This is the amount payable. Okay, and what he has paid is rupees 2,500, 8,000, 15,000, and 24,000 within the respective installments. So there is the paid amount is cumulative. Okay, till June he has paid 2,500. It can be in a single payment or it can be in multiple payments. And till September 15, he has totally paid 8,000 rupees. It is not 2,500 plus 8,000. It is totally 8,000. The 2,500 is there inside the 8,000 only. That is cumulative. And the cumulative shortfall is rupees 1,250, 3,250, 3,750, and 1,000 respectively. So what is the penalty in this scenario? We saw that it is 1% into 3 months for the difference amount in first installment till third installment, and 1% into difference amount into 1 month for the last installment. According to this, the penalty interest will be rupees 37.5, 97.5, 112.5, and rupees 10, totaling to rupees 257.50. If you put in an extra 150 rupees, you can take GST filing service in Zolve it, as you know. So this much interest unnecessarily. So this is, you have paid some amount of advance tax. Out of the 25,000, you have paid 24,000 as advance tax. Only 1,000 rupees you missed. But still, for that 1,000 rupees which you missed, you are paying 257 rupees. So if you see the ratio between 1,000 rupees which is missed and the interest, it is quite high, right? Okay, moving on. If you see that under section 234B and C, both are for not properly filing, not properly paying advance tax. That is the same mistake. For the same mistake, you are getting charged under section 234B and section 234C. So by this you should understand how crucial it is for you to be on top of the advance tax provisions and to be on top of advance tax payment in general. So this section 234C has an interesting non-applicability list, meaning if you have these four income, you need not pay taxes under the installment factors. So if you have any capital gains, or if you have dividend income, if you have any winnings from lotteries, or if your business is a first year business, in all these cases, you don't need to follow the installment process. You can make the entire 100% advance tax payment by 31st March of 2025, which means you will not be incurring 234C interest. The cost 234C interest is for deferment in payment of advance tax. Next, with this, we have completed all the advance tax provisions which you need to know at core. So I hope you have a solid understanding on what is advance tax, for whom it is applicable, how to compute advance tax, the due dates, and the payment of advance tax, and the penalty interest. It is very, very crucial because people lose thousands and thousands of money in this three sections alone. That is why we have prioritized this as our first webinar. And what's the next step? So I have an action plan for you. Action plan number 1 is that for the financial year 24-25, that is the current financial year, the time is ticking. So we still have time till 31st March 2025. We have the last installment of 15th March and also have 31st March as an overall cutoff time within which we can make any amount of advance tax. So even if we calculate now, we can pay advance tax and we can meet the 90% criteria which we earlier saw under section 234B. If we are able to achieve that 90% criteria, we no need to incur interest under section 94B, but still we will be paying interest for deferment in advance tax. And that too, if you are a first year company, that is, if your business is going on for the first year, you need not pay any advance tax. You won't be incurring 234C interest also if you make the advance tax payment within 31st March 2025. So what you can do is, I'm aware that all of you present here are existing clients of Zolvit. So you can, I'm sure you are in touch with either your account manager or your accountant. You can get in touch with them and ask them for the advance tax filing. What all you need to submit is, you need to submit the bank statement, the purchase and sales data, and all the expense data, and you can sign up for the advance tax payment service. You can give these data and they will calculate the advance tax payable, which you can make the payment within 15th March or 31st March as per your availability, right? For financial year 24-25, this is the last and only chance for us to reduce the interest under section 234B and C. 234A will make sure that it never happens because it occurs only when we delay the filing of returns. We'll not delay the filing of returns anyways, so we won't be incurring 234A interest. Now, we have a scope for reducing 234B interest and C interest. So, get in touch with your account managers, sign up for the advanced tax payment plan, and get your advanced taxes done for the current year now itself as soon as possible. However, soon you can give us the data, the sooner we can also provide the service to you without making any delays. And the second action plan is that for the upcoming financial year, that is for the financial year 25-26, we can save all the penalty interest. That is, we no need to incur 234B and we don't need to incur 234C also, because if you sign up for the real-time accounting service, you will be able to be on top of your accounts for the whole year. So, what are the advantages of real-time accounting, you ask? You can pay the advance taxes on time. The TDS compliances will be met. The books of accounts will be completed by April end. That is April end of 2026, I'm saying. So, and you no need to rush in the last minute. As you give the books of accounts for us for accounting, you will be given priority amidst the people who rush at the end of the filing time. So your returns will be filed on time, guaranteed. So what exactly is real-time accounting? Let's say we are starting April as a new financial year, April 2025. You will go through the business, you will finish the business in April, and in May first week, you will share us the data. What data? The bank statements, purchases, sales, and expenses. You will share us this data. We will draw the accounts, that is the P&L and balance sheet in our software or the software for which you have signed up. We will draw the accounts in the software and will provide you with the profit and loss account, balance sheet, and trial balance at the end of every month, so that you can understand where you are at in your business. You can in real time see how much sales you've made, how much expenses you have, where all you can reduce the expenses, how all you can save taxes. You can put a tax planning in place. You can get in touch with your accountant often, and you can discuss the tax planning to reduce the tax and make it as minimum as possible. So after this real-time accounting is done, so it will get completed by April for the entire financial year, April of 2026 for the entire financial year. And this way, if you're a company or an LLP or a partnership, your individuals, the partners or the director's account can also be planned accordingly. The tax planning for the directors and partners also can be planned, and their tax can also be planned in a way that you pay minimum tax. So this is not tax avoidance or evasion. This is tax planning, right? So if you are having a business and you are on top of the business, you can get the taxes minimized for the partners and directors as well. So get in touch with your account managers today and sign up for the real-time accounting service for 25-26 financial year, and the advanced tax payment service for 24-25 financial year. Now the decision is yours. I hope you have a solid understanding of the advanced tax which we've discussed. Even if you're quite not okay, you can ask questions to me on the chat box. I'll reply to it as much as possible. But the key here, or the goal here, which I have for this session is for you to be aware of what is there in advanced tax rather than knowing it 100%, because you are already masters in your own businesses. You are not necessarily required to know taxes entirely. You must be aware of what is there. Now you know when to pay advance tax, how much to pay advance tax, what will happen if you don't pay advance tax, 234 ABC interest. By just participating in today's session, you have already leveled up then you 99% of the taxpayers. So they incur thousands of rupees as penalty. So this is really heart-aching to see thousands of rupees going as just as penalty, interest, late fees, and you know uh, other than tax, it is going as a waste. This happens only because the assessees are not aware of the advanced tax provisions or the TDS provisions. So now you are aware of what to do. You just need to do something. You need to take action to execute whatever we have learned now, right? So that's all for the day. If you have any questions, you can ask in the chat box. Any questions, guys? Others, were you all able to hear me? Because Mr. Roy has said that he is not able to hear. Okay. So your voices are not audible to me. If you can leave a message in the chat box, I can reply to that. Okay. So, as I was saying, you can contact your account managers or accountants, and you can sign up for these services and not pay interest or penalty for advance tax. This is the only goal of this session for me. How many people have attended? 6 people are there totally, apart from myself and the admin. There are 4 of you, and 4 of you should not incur any advance tax interest penalties for the financial year 25-26, right? If you have any doubts, you can ask, guys. All right. Thank you for all 4 of you for participating in today's webinar. I hope this is useful to you, and I'm sure that you are a step leveled up than all the others because you are now aware of the advanced tax provisions. So stay in touch, follow us on all the social medias. We'll keep you posted on upcoming webinars, and you can join them too and be on top of your taxes. Thank you for attending, all of you. Thanks.